When you read through an IM of a commercial property, IM stands for information memorandum, you sometimes see something like that, significant depreciation benefit. In this video, I am going to share with you what is this significant depreciation benefit means and how the depreciations can be calculated in a commercial property, how this can be a lucrative strategy to your commercial property portfolio. If you are interested, then stick around. Okay, what is significant depreciation benefits? Let me give you an example of a carpet in your house. Let's say if you bought a brand new carpet and that carpet is, you paid $200. So that carpet is going to last for, let's say, 10 years. Now, when you paid $200 and that $200, if you on the first year, if you put as an expense, then that is, in the accounting term, it's not correct because that carpet is going to last for 10 years. What about the year 2, year 3, year 4? So the way accountant does is that they do, rather than paying that $200 on the first year or on the 10th year, they actually divide it to 10 consecutive years, and it's basically like 200 divided by 10, so like $20 every year you will get that as like $20 expense in your accounting terms. So this is kind of a depreciation example. It means like after 10 years the carpet needs to be replaced, so every year you got $20, so you set aside this $20 in your account so that after 10 years again that $200 is there and you will be actually paying that $200 to buy another carpet. So this is the same concept and it works fine if the value actually of that carpet, it diminishes, it happens. But in commercial property, the same concept, but it does not work similarly. It's in commercial property, the depreciation, the house building, we say that it is going to depreciate, but it does not depreciate in 10 or 20 years. Because if you build a commercial property, although in the accounting term, let's say about next 25 years or 30 years, you can depreciate the whole building, but sometimes this building can stay for 40, 50, 60 years. And which is why it is significant depreciation benefits is like you would be able to claim that depreciation, but in reality it can last even longer. So, and the land price, it always goes up. So the depreciation benefits is like if you buy something like a brand new property or towards the brand new, or even commercial property, generally it's an income producing asset. It increases like every single year after paying all your mortgages, it is going to keep you it can keep that money in your bank account. So the depreciation that you do, or basically that you pay, that you did not spend it, but you do not have to pay tax on the profit of whatever amount that you are claiming the depreciation, which is why a significant depreciation benefits mean in commercial property. So let me give you an example. Let's say you are collecting again 100,000 rent, and out of that 70,000 that you are paying to the mortgages, interest only payment. So then every single year you are keeping this 30,000 profit. Now if you have significant depreciation benefits and you have done that calculation, and then let's say every year you are claiming that 20,000 depreciation, then yes, that 30,000 minus 20,000, then you will be paying tax only on 10,000. And the year after, so basically that 20,000, so 30,000 will be there in the bank account. But because you are claiming the depreciation, only 10,000 you'll be paying the tax, and assuming that it is a 25 or 30% tax, so you will pay only $2,000 or $3,000 tax. Now be careful though, this depreciation doesn't mean when you will sell that property, this depreciation, whatever you are claiming, you need to pay back in form of capital gain tax, because this depreciation that you are claiming, in reality it is not a depreciation. So as long as you can keep the property in the commercial property for as long term, then this is fine, because you need immediate cash flow now. You do not want to pay that tax, which is why it is called significant depreciation benefits, because you are getting immediate cash benefits which you can use it to for your other stuff, like you can buy more commercial properties, or you can do more other investment using this extra money that you keep because you are not paying the tax and you are doing this depreciation. So when they're saying significant, it is generally meaning that the property is relatively brand new. So if it is a brand new type of properties, the initial depreciation is more. As the property's age goes down, like as the property age becomes more and more, then you will see that the depreciation benefits gets lesser and lesser. So in other words, if you buy a 40 years old building, the depreciation would be less versus if you're buying a 5 years old building. So significant depreciation benefits is generally saying that it's a newer properties, and that depreciation, if you just understood what I said, I hope now you understood a little bit about what depreciation is. If you do not, then another option is that to talk to your accountant and ask them that, okay, can you explain that if I buy this property, what is the depreciation and how much I'll be able to, get that every single year. Your accountant would be able to explain that, and you would be much better off having a significant depreciation benefits, because that way you would keep more money in the bank account. I hope you find this video helpful. Thank you so much for watching, and I'll see you next time. Bye bye.